The equities market extended its resilient performance into the third quarter of 2025. Abigail Alabi, the Sub-Saharan Africa Industrial Goods Analyst at Vetiva, highlights that July was particularly strong with broad-based gains across industrial goods, banking and insurance sectors, driven by interim dividend expectations and positive earnings momentum. However, profit-taking set in by the month of August, followed by a more cautious tone in September as activity levels eased. She joins me now to unpack the market performance for the fourth quarter. Thank you so much for your time today, Abigail. And let's get a look, trace ourselves back and look at what we saw play out in the third quarter. Quite a lot in terms of what happened in the markets. Your take on that, and how are we positioning for this quarter?
Okay, thank you very much for having me. So for the third quarter of the year, we saw a bit of cautious optimism in the equities market as opposed to what happened in the first quarter and second quarter of the year. So for the first quarter, second quarter of the year, we saw strong rallies across all names in the equities market. We saw some stocks deliver as high as about 200% year to date. However, for the month of July, we still saw the bullish momentum also continue to linger. For the month of July, we saw that earnings expectations, dividend payment announcement were also part of the things that drove the expectation of the bullish sentiment that we saw in July. And that also informed the sectoral gains that we saw in the month of July. However, going into the month of August, we saw that for the first few trading sessions in the month of August, the bullish momentum still filtered in. However, towards the middle to the tail end of August, we saw profit taking across all sectors, and we're beginning to see this momentum begin to quiet down. And that also affected certain number of sectors as well. So, I mean, the momentum that we saw in the first half of the year started to fade, and that also affected the equity markets in August. We also saw that investors were very much cautious about what they were investing in, or they were very much cautious about what stock they were adding into their portfolio, as opposed to the first half of the year where we saw the momentum chasers across all the names in the equity market. But however, for August, we saw lots of cautious movements, and for September, we started to see a bit of return back into the equity market. And this was driven by the reducing rates in the or the declining rates in the fixed income market, and the fact that we also saw the CBN also started to give out signals that they were going to also cut down rates. That also started to give some sort of attractiveness, so that was able to improve some sort of attractive injectors market. So for September, we were seeing a bit of bullish momentum returning to the market, but it was not as strong as what we saw in October. And for the next quarter, for the Q4, which is also a sector, a part of the year that also highlights a lot of trading activity, we expect to see lots of accumulation in the last quarter of the year. Given the fact that we are going to see companies release their 9-month results. So for the likes of the consumer goods sector, we expect that it will also deliver significantly well in the 9-month result. And for the banking sector, while they delivered they didn't do as much as we would expect in their first half of the year, and also dividend payments were also not as expected. We'll most likely see investors still wait on the sidelines in the area, in aspect or in the area of picking out banking stocks. But so far for Q4, the expectation is what are their results going to say in the last quarter of the year? What is the CBN's body language when it comes to rates? Do we see the CBN reducing more rates in the last quarter of the year? And all of those things will inform what we'll see in the equity market for Q4.
Quite interesting viewpoints you put out there, and I'm curious to know your take on the markets today and for the rest of this week, and then also beyond the policy-driven sentiments, what risk could temper investor appetite?
So for this week, I mean, we're already started to see that, like I said, the last quarter of the year typically highlights major activities that we are going to see at the end of the year, particularly for select counters on the exchange. So for this month or for this week, that we expect that consumers or investors are very cautious about stocks to be picking. So they'll most likely focus on fundamentally sound names or names that they expect to do significantly well in their upcoming financial performance. I mean, the Q3 period is already over, and we expect to see key names start to release their results starting from the beginning of this, or starting from today up until the middle of the month. So all of this will definitely be a huge factor that would significantly drive activity in the equity market this week. And like I said, investors are still in the business of picking out stocks and fundamentally sound stocks that will give them good returns rather. And for the weak sentiments that can affect or that can sort of create a downside to what we expect. First is the major thing that has been a huge factor since the beginning of the year that has also fueled investors' interest, both foreign investors and also domestic investors, is the improved macro trend. It is no news that we've been seeing declining inflation numbers since the beginning of the year. We've also seen improved FX stability as well, which is sort of giving confidence to foreign investors when it comes to repatriation of funds. And all of those improved macro trends has sort of guided a lot of investors when it comes to liquidity in the equities market. Those have been a major factor that have been causing significant liquidity in the equities market. So should we see a reversal of these trends that we have seen, that will sort of cause a capital flight from the equities market in the area, in let's say for both domestic and also for foreign investors. So
right.
I mean, a reversal of trends that we have seen in the macros can also be a downside risk.
All right, then. Definitely quite a lot to look forward to, but thank you so much for your time today. Abigail Alabi there, the Sub-Saharan African Industrial Goods Analyst from Vetiva, giving us a run-through on sentiment in the market today and what to expect as the year winds down.